What up?
What up? How you doing?
Good morning. I'm doing great. I've got like the best bag of grapes I've ever had in my life, which I don't know if you like grapes, but I'm a big green grape guy. I swear, this is like the best bag of all time. I can't stop eating them. I just got it like 2 hours ago.
Where'd you get
Green
it from?
grapes, no.
Food Line. I'm a big Food Line guy.
Yeah, I like Food Line.
I can walk in any Food Line in the United States and find exactly what I want within 15 minutes. Like the whole thing I can check out.
What about the Sneed's Berry food line? Because it's not my favorite.
Nah, me neither, but that's where I grew up, so I know it.
That's why I try not to go there.
Yeah, no, I get that.
Hey, today let's talk about taxes. I don't know much about taxes. And the CPA I use is because A, I really didn't like my last CPA, and B, Brandon uses this CPA. So I just followed his lead. He's a good guy, went to state. That's pretty much my qualification for everything almost. So it is what it is, but I've been happy with him so far. He does a great job. He always communicates with me, which I think is probably in any business, like we talk about. Got anybody you can get on the horn or on the text at 7:00 on a Friday, and he's willing to respond at least to let you know that he got it. I mean, that's half the job for me right there, just talking to me. Brandon shared this thing about real estate deductions. I'm happy to share that, and we can kind of talk through it if anybody's interested. If anybody wants to just share kind of, I don't know, best practices and what you're doing without getting too specific or whatever you want to do. This is not going to be necessarily advice, because I don't think you should take anyone's advice tax-wise other than your CPA. But maybe it's good stuff to kind of share and kick around so people know what everybody else is
Oh
doing.
my God, I thought we were talking about taxes like property taxes and stuff like that. But
No,
this
we're
is
talking about stuff for ourselves today.
perfect.
Is the IRS joining this call?
It's already on
Is
every
there a
call.
reason why we're recording this? Because I feel like I'm going to jail already.
Hey, Ginger. So basically, when I got into real estate, and I know not everybody does this, and I know it's not necessarily necessary, but I went ahead and set up an LLC, and I have always received all my commissions there since like 3 months into real estate. I've always received all of my commissions there. And then because I was used to being on a monthly payroll for working for the state for so long, I set up just once a month payroll to take my taxes out and everything then. So I wanted it to be very similar to what I was used to. And my take pay for myself didn't change month to month based on if I had a really great month or if I had a slow month. I did it on purpose so we could budget wise. So curious to hear what everybody else is doing, and then just kind of kick off the conversation and go from there. Also, I think I've shared this so you can see it. These are the real estate deductions thing that Brandon sent in the work chat the other day. So who wants to talk?
I mean,
This
Andrew
is
did.
well timed, Doug, because I'm literally working on my taxes as we speak.
Yep.
And my first piece would be inundate them with paper. Keep every receipt, everything.
Well, see, now I will say this. I hadn't kept a receipt since I've been in real estate. I use QuickBooks,
Me too.
and I reconcile every transaction in QuickBooks.
Yep.
So I think the first thing you need to do is figure out what kind of person you're going to be and what your CPA is going to require.
Right.
Because if you're working with a CPA who says you better have receipts and you don't have receipts, you're looking at trouble. If you've got a CPA that says put everything in QuickBooks and reconcile it, and then I can go look at it, well, then there you go. Or if it's somewhere in the middle. First thing is figure out who you're working with and what they're going to require.
My guy, Ben Barnes, who I think several of y'all may know, he said, keep the receipts, just bring me an itemized sheet. So I'm literally going through I'm seeing him on Thursday. So I'm going through everything, but I'm going to take the box in case he needs to look at something specifically. So I don't know if that helps anybody.
I'm sure people have probably heard this before. You can deduct if you have part of your house as your office. The advice I've always been given is that is absolutely terrible and do not do it, because if you want to get audited, that's the first way. That's one of the biggest red flags that the IRS looks at to audit you, is if you are deducting part of your house like as your office space because you need to prove it's 100% usage. The other thing, mileage wise, so I have myself set up a little different than Doug. I kind of take payment through myself, but I also have an LLC for other things. And I have a separate business vehicle and personal vehicles. And that's completely legal. The biggest thing is you need to have a personal vehicle, a vehicle that's in your personal name that you pay personal insurance, and then a vehicle that is separate. So if you have like an LLC, kind of like what Doug was saying, where you set yourself up that way, you title the vehicle in the LLC. Everything you do in that vehicle is related to your business. That way you can deduct all the mileage on it. And if you drive a lot, like I'm sure a lot of us do, that usually is going to heavily outweigh the actual expenses that you have related to that vehicle.
Yeah, I use QuickBooks to keep track of every single mile. The problem is going back in there every time and, you know, reconciling it. And I mean, if you wait too long, it can become this huge thing of months and months and months of where you've traveled and stuff. So
Showing time is a great way to keep track of
yeah,
things, by
I
the
do
way.
that too. Yeah.
If you
I
don't
know
do it
where
at the
it's
end
at.
of every month, like
Yeah.
go into showing time, and then
Yeah.
you can just kind of track
Figure it
out
out.
everywhere you went and yeah, put it in your file. You don't need to send that information in, but if you ever get audited, they're going to look at they're going to want to know where you were and why.
Yeah.
That's
I
the
think
only
what-
thing I don't do a good job of.
What, the mileage?
Mileage. We're
Yeah.
we're in the matrix. I don't keep track of my mileage. I should keep track of my mileage. It's just you're pretty much 90% of where I go is work related. So, you know, I like to stay at home. I don't go anywhere unless I'm going to the office or showing a house. So I need to do a better job of that. I don't have an LLC. I'm too cheap to pay for payroll, and I'm too cheap to pay for an LLC every year. As Doug can tell you, I don't want to spend any dollar I make. So since I've been in real estate, every single time I have a closing, I set aside 40% of that for taxes,
Yep.
and I pay quarterly taxes.
Yep.
Our CPA says I should probably set aside 30%. I would rather have some left over to use on a vacation or an investment or something like that. So I set aside 40% because I think that's going to be safe. I keep every single receipt. If I take someone a coffee, if I buy them a gift, if I split lunch with somebody, I keep a paper copy. Well, I keep the receipt. I make a photocopy of that, and then I staple or tape the original to the copy and write an explanation of who I was with, what it was for, yada, yada, yada. I do that for everything. I keep receipts for buying stamps. I keep a receipt for everything.
Closing gift.
And I keep a running ledger of it, and I give the tally to my accountant, and he doesn't need to see the receipts, but I have them.
Hey, Brandon, I was going to ask, when you take the digital copies, what do you do with those? Are you just saving it on your phone or?
I keep it in. I keep a folder in my office upstairs at my house that has all the receipts. It's got the a copy with the original attached to it and then a description. And I keep a running ledger of that. So when I get my taxes done, I can say, here's all my business expenses. I also keep a printout of post licensing fees, license renewal fees. I do the home office credit. I take a tax credit for my cell phone, for my home internet. I mean, I get every single one I possibly can. And we'll see how it goes.
If you use QuickBooks, you can scan and upload
Yeah.
receipt
Receipt.
into QuickBooks
It's amazing.
as a redundancy, or so you don't have to keep the paper trail. And see, that just shows you there's more than one way to scan a cat, because we use the same CPA and I don't do any of that.
Yeah.
All I do
You're
is
supposed to keep
reconcile
3
everything.
years of records, I believe, is what they can audit.
It's either 3 or 7. I think at one point it was 7, but it may be 3 now. I don't know, but I don't want to pay for QuickBooks. I also am a control freak, so I want to be able to get everything and do it my way. So that's why I keep the paper copies.
Books
of
is
it.
$4.99 a month.
Yeah.
No.
Well,
No. You pay. No. Don't pay money for QuickBooks a month. You buy the CD, right? So if you don't need to have the constant uploads of
Do you
things,
still have CD-ROMs.
Hey, my computer doesn't take a CD.
Mine
What?
doesn't either.
get an
No.
adapter. You buy a USB CD adapter.
Mine doesn't even take a
Portable
USB.
There.
You all need to get different computers.
No, I think QuickBooks is
Or
great. It's
pay
a way to-
$4.99 a
you
month.
You can connect your card. You can connect your bank, and so it's all right there. And it's a great tracking tool. I will tell you, it was really difficult going from a W-2 to a 1099 and figuring out how much taxes, how much is too much.
And you get to deduct the $4.99.
Huh? Oh, right. Exactly.
Right.
Y'all connect your banking information to QuickBooks.
Huh?
I don't.
Yeah.
Yep.
Oh,
You
see,
totally can.
absolutely not.
If somebody wants your banking info to be nefarious, they're gonna get it. It ain't gonna be because of QuickBooks.
I know, but I'm not going to make it easier for them.
My accountant's very creative, and I am told that I can write off getting my nails done, getting my hair done.
What? Dang, I need to go to your CPA.
Start getting my nails done.
If you're buying
I
clothes,
like it.
Really? My CPA said I could not write off clothes.
She said if you only wear them for work, you can write them off if it's a uniform. But if you wear them anywhere else other than work, you cannot.
A
I wouldn't
uniform.
do that. That's a little too much of a blur for me, but I respect the ability to pull it off flawlessly.
You guys don't know how much money us girls spend on clothes. Maybe you guys spend just as much. I don't know.
I don't want to get audited over it though.
clothes, Brandon. When are the sweatshirts and stuff coming in? Have you heard
I
anything?
ordered them. They're just
Yeah.
waiting.
Who do I pay?
They're,
I never paid anybody.
they're likely to be completed next week. So once Doug gets them in hand, I'll send everybody a bill and you can pay him.
Yeah, for me, honestly, the biggest thing for me is mileage. Like
Yeah.
that I get so much money back from that. Well, not get back, but like deduction on my actual taxable income. It's
It's
Yeah.
ridiculous. Yeah.
So my first 2 years in real estate, well, my first like 6 months, I had the app on my phone. And after a little while, I was like, are you kidding me? I'm not doing this shit every day. So I just started basically taking my total miles for the years and divided it in half. Again, you know what? I'm happy with whatever that gets me. If you want to do more than that, obviously there are a ton of apps out there. MileIQ is the one that Ginger just showed me. I'm pretty sure that's the one I used. There are a lot of different apps you can use to track it directly. Also, Nate was saying yesterday too, like at least for your showings, you can always go back in showing time and pull out your routes that have all the mileage as well if you want to be really specific and document it.
I wrote off $8,200 in miles last year. That's a lot.
What all these big companies do, Felicia, they just write it off.
And
Write it off.
And if you go to a wine store and load up on wine or liquor store, then you technically could write it off because who's to say you're not hosting an open house?
Or if
Zach,
you go to Home Goods and buy
like
a
the way
table
you
for your
think.
house, I
You're
mean,
staging.
buy it.
You're buying
I was under the impression that there's some regulation. I don't know if it's a real estate commission thing that you're not supposed to write off either $25 or $35 above a client gift. I've never obeyed that. Anytime I buy somebody a bottle of wine or a gift card or whatever it is, I write the whole thing off. So maybe I'm kind of running with scissors with respect to that. I don't know, but I'm doing it.
I write off all my closing gifts.
biggest thing is just make sure that you keep track of stuff. That would be my advice. Knowing people who have been audited is that as long as you have your paper trail, you'll be okay. It'll probably be the most stressful time of your life, but as long as you keep track of everything and it can be documented, you'll be all right. For the mileage tracking, the way I do it is I have an Excel spreadsheet. I know it's old school, but it means that I control my mileage input, so I know it's correct.
Do you
And
do
I
that
don't have to
every
rely-
single day? Do you reconcile that every single day?
Of course.
Oh my God.
Dang.
Yep.
I'm going to get my taxes done tomorrow, and I can assure you I'll be up all night tonight trying to get all my shit together.
I got audited when I worked for Rivals, and if you keep your paperwork and can prove stuff, you'll be all right.
I got audited too, and that's how I met the CPA that I've got. When Amber was in pharmacy school and I worked at NC State, we were poor as shit. I did my taxes online with TurboTax, and she got a education credit that she shouldn't have gotten, but for some reason TurboTax gave it to us, and it was $11,000. That's how I met this guy. He got it down to like 800. So he's great. So I pretty much do whatever he says. He does say at a certain point that at a certain point of income, it is better for you to create an LLC because there are some additional things that you can do. But, and I'm not trying to get into a whole thing here, so don't start freaking out on me. That the extent to which that benefited someone was greatly reduced during the Trump administration. Essentially, it just made it easier on everybody during that time. So we'll see. I may do that, but I just don't want the expenses associated with it.
It's about $250 a year, by the way, for an LLC in North Carolina, just as a heads up. And you can deduct that.
Yep.
You deduct it on the following year, though, when you
Right.
do your renewal.
So what's the difference between having an LLC and an S corp? Y'all know?
I don't really know if anyone here is qualified to answer that to the degree that you want.
Complicated, to say the least. At the end of the day, for the most part, your LLCs are usually going to be single entity. So they act as a pass-through. With the S corp, you've basically got different rules and regulations that you have to follow that are not as strict with an LLC. That's the high level of it.
At what point
LLCs
does
though are
people
also
say-
great for shielding in case anybody here owns investment properties or rental properties. I'm not telling you what to do, but I would highly advise if you don't have it in an LLC, you should, or at least purchase them that way, because if somebody's going to sue somebody or they want to come after you for some reason, if they trip and fall at your LLC's property, the only thing they can sue is your LLC. If they trip and fall at your rental property under your name, they can come after you and everything that you own.
Yeah. So if you have an investment property and you don't have it in some sort of business or corporate, you be well advised to call your insurance person about an umbrella policy so that you don't lose your ass.
Well, now that we all feel a whole lot more comfortable.
Yeah. I think that's pretty much it. I don't know. Doug kind of just teleported.
So and we did the same thing. So we don't use a CPA because Andrew's like, you know, he does all the taxes forever and ever, amen. And of course he was like, I don't know what to do. You've been a W-2. Now we got to figure this out. We do quarterly taxes. We do 40%. And he's like, oh my God, I overpaid. And like you said, I think it's better to have it that way than be like, shit, now I got to owe $100,000.
Well, I mean, yeah, exactly. I mean, I know Doug pays quarterly too, and I do, and I like paying quarterly because I would rather pay, $6,000 to $8,000 occasionally throughout the year and get a smaller tax bill come March or April the following year, as getting one for like $64,000.
Yeah.
And I know and used to work with a bunch of people that didn't save at all. So when they got their tax bill in February, March, or April, their first quarter of commissions was to pay their tax bill for the prior year. And I'm not really interested in living that way.
You also get fined if you don't pay quarterly.
My CPA said that's not true, and I hope it's not because I forgot to mail in third and fourth quarter.
Like a penalty.
I already got a fine in the mail.
You did? She told me that's not true. I filed through Florida though, so maybe it's different.
I got one from Georgia, a fine.
There's a penalty if you don't do quarterly, but you pay it at the time when you file your taxes, and each tax bracket and everything will dictate whether or not it's more beneficial for you to go ahead and pay that penalty and keep the money throughout the year and use it to, do investment or anything else that you want to do with it. I personally don't pay throughout the year. I just stockpile money and then invest with it and then pay the penalty because for me, it's not worth it.
It depends on what you're going to do with the money that you set aside. So I would advise as you people start making hundreds of thousands of dollars because you sell so much real estate that you're trying to be strategic with this and talk to a professional who can give you some guidance, because I've got no clue what I'm doing. And I was always covered because I always paid myself like payroll since I've been in real estate. But then last year I had to start actually paying quarterly taxes for the business too, because I didn't do it the previous year with my previous CPA. And then I had a huge tax bill like Brandon was talking about.
What does a CPA typically charge? What's
$300.
for the year or the quarter?
No, just for me, the one time going and getting everything sorted out. It's $300.
My
Meredith,
CPA
that's a
Worth
little
every
bit
penny.
of a question. It depends on, it can depend on what you've got going on. If your CPA is just straight up doing your taxes, my guy's 385. Ours can be a little bit more complicated than others. Also, it may be a little bit different back home and up here just because the markets are different. But some CPAs help with investment advice and things of that nature. And if they are involved in all that stuff, there's a high probability that it could be higher than that. But it's no different than real estate, right? If you take a discount broker and they take photos of their listing with their Samsung Galaxy, it's probably not going to look as good as what we get with Lighthouse. So keep that in mind. That's an expense that is worth it, and you can write that expense off, of course.
Are you knocking my Samsung Galaxy phone?
Yeah, for real.
I was, but it wasn't personal.
It was completely personal. Meredith also, because he's doing our personal and my business, I can tell you mine's not $300. I wish it was.
Yeah, mine either, but we filed 2 states and we have stock and 1099 and he's a W-2. So it just depends on your situation.
I would say reach out to people who you know to find out. I use a guy who my family's used forever, and he charges me $180, and I can call him whenever I want. He's this old dude who's really cool, George. So if I have a tax question, I just call him. But I would say find somebody who either you know personally that is one, and then maybe ask for references, because whoever your tax person is, you're going to be kind of talking to them about potentially some sensitive subjects and ways to figure things out that you may not want to have recorded.
That's really good advice. You don't need to turn this over to somebody that you only talk to every tax season. You need to find somebody that you can feel comfortable talking about a lot of things. Like mine, for example, put us in touch with a financial planner to look at doing some other stuff. So, you need to look at this as not a one-time service thing, but a relationship that you're going to maintain for years. So they have a grand idea of what's going on with what you need, and they can give you some guidance, in my opinion.
Especially if you have a spouse that is employed, they can help you with making sure that they're doing the appropriate tax withholdings on their W-2 job. That's something that we had an issue with one time. Amber's employer wasn't withholding enough. So they can give you some advice on that. And also you want to think just the natural trajectory of being in this business. You're going to earn more in year 2 than 1. And theoretically you would slightly go up every single year until you get to a point where you're comfortable with what you're doing. But a CPA can help you plan for those long-term goals like that.
Some things to ask your CPAs about.
At the end of every year is, we're projecting what my tax payment is going to be, and then we'll look at what's the max that I can contribute to my retirement to help to offset that as well. So you can maximize every dollar.
On that tax retirement thing, something that now that I'm married, we changed with Steph's income, and something that if you have somebody who's a W-2, maybe ask your CPAs about this, but there's a maximum amount that they can contribute to a 401k that's an employer sponsored, that 99% of people will never actually hit that amount with their normal contribution. So it's a way to kind of front load the amount of money they're going to get in their retirement. I think it's like $14,000 a year or $18,000 a year is the max that you can put in with an employer sponsored plan. Whereas with a traditional Roth that is your own, the most you can put in is like $6,000, unless you set up a SEP, which is a self-employed pension, I think is what the name of it is. And there you can put, I believe it's 20% of your income as a 1099. If you don't know anything about this stuff, ask your CPA. It may be something that's beneficial for you based on how you run your taxes. It may not be, but I know that it saved me quite a lot over the last few years running it that way.
I think the overall or overarching advice is be strategic with your tax plan and what you're doing and how you're going about it so you can maximize the numbers in whatever way you want it to benefit you, whether it's cash in hand or retirement or deferring paying taxes or any of that. Yeah.
And find a good CPA that you can trust.
Yep, absolutely. That would be my advice. Any other questions or comments? I know folks, I heard people talking about this in the office yesterday, and I know that it had been mentioned in the group a couple of times, and then Brandon shared that thing. So I hope this was somewhat helpful for everybody, just to give a little insight, and maybe it makes you feel better about what you're doing, or maybe you say, hey, maybe I should see if there are other options that I can squeeze more out of it, or whatever. But hey, at least we had the discussion, and we're all about providing value, right? So there's your value for today. Anybody have anything else? Well, that was nice and clean. Go have a great day. Holler if you need me. You guys are rocking and rolling to start February.
Groundhog saw his shadow.
Oh,
What's that mean?
that
6
mean
more
more?
weeks of winter.
6 more? Who wants
At
to
least
say?
that's what my 5th grader said anyway.
All right. Well,
Y'all have a great day. I'm out of here.
bye, everybody.
Bye.
Bye.